everyone. Welcome to today's fundamentals. So, what's up in the FX market?
Well, in the FX market, the euro is about to break even following yesterday's downwards moving trend. The pound is reaching yesterday's open figure. The Aussie is moving in a downwards trajectory. The dollar against the Japanese yen appears to have covered yesterday's loss and is moving in an upwards fashion. And the dollar against the Turkish lira has halted at the $23.65 mark. Lastly, the dollar against the CAD appears to be neutral, breaking even with yesterday's open and close. It appears to have remained within those boundaries as defined by yesterday's trading session. And lastly, what is interesting is the euro against the Swedish krona. It has reached all-time highs, with the Swedish krona dropping to levels last seen in 2009 and even lower, so forming a new all-time low for the Swedish krona and a new all-time high for the euro.
How has the gold prices been reacting?
Gold's price appears to be moving in a slightly downward trajectory. Now, following the greenback slightly strengthening across the board, it would appear that their inverse relationship with gold has now been slightly highlighted, with gold moving slightly downwards and is currently below the $2,000 key psychological level.
How about the US stock markets?
Well, the Nasdaq is nearing yesterday's close. The Dow Jones is moving in a downwards fashion, and the S&P 500 appears to be in a neutral position, so within yesterday's open and close. Now, the reasoning behind this could be that the markets may be anticipating the speech by Fed Chair Powell before the House due today, where it is anticipated that it may have a significant impact on both the forex market and the US stock markets.
How about the oil prices?
Oil prices are up today, but barely. It appears that China's economic woes have not transcended into the market, and it appears that oil may be moving in a slightly upward trajectory, although it's a minimal increase. Hence, we may see oil continuing in the downward trajectory should economic fears of a recession resurface.
What's in today's calendar?
Well, in today's calendar, we have the Swedish unemployment rate, the UK CBI trend orders, Canada's retail sales, and the Czech Republic's interest rate decision, where there is a 54.4% probability that the bank will remain on hold. However, we also have in the American session ECB's Schnabel, whose hawkish statements made previously may be reiterated during today's speech as well. In addition, we have the Senate Banking Committee's hearings on the nominations of Adrian Kugler, Lisa Cook, and Philip Jefferson to Fed positions. And the highlight of the day will most likely be, as stated before, Fed Chair Powell's speech, testimony before Congress. And we also note Chicago Fed President Goldsby and Cleveland Fed President Messer, which are due to speak after the testimony before the House. However, it would appear, and in my own personal opinion, that those will most likely be overshadowed by the statements made by Fed Chair Powell. And lastly, we note New Zealand's trade balance in tomorrow's Asian session.
Thank you for your time. Join us after a short break for a technical analysis.
Hello, and welcome to today's technical analysis. So, starting off from yesterday, we can see that on the daily chart, the euro appears to be moving against the dollar in an upwards fashion. So, closing near equal yesterday, yet is moving slightly higher in today's trading session. Note our support level that we had placed yesterday, acting once again as support, verifying that this is indeed a support level. Despite the wick breaking below, the body of the candle has remained between S1 and R1. Now note that the Bollinger Bands have also narrowed, with the upper band reaching our resistance at R1, 1.0950. So I would personally anticipate that it may move in a sideways fashion up until the speech of Fed Chair Powell, as we noted during our fundamental analysis, where essentially, should the Fed Chair be more hawkish, then we may see the greenback appreciating against its counterparts, so against the euro, the cable, Japanese yen, etc., etc. Whereas, should he sound slightly more dovish, then we may see the euro breaking above R1 and moving towards R2. Now, on the other hand, should it break below S1 at 1.0910, then we may see the pair moving to test support at 1.0860. So let's just place these in. Now, the nominations of Kugler, Jefferson, and it was Jefferson and Kugler. I've forgotten the third one. Will could potentially provide an interesting outlook on the Fed's future decisions. Now, based on some preliminary statements that were seen yesterday, we may see some market moving during the testimony, the confirmation of the Fed members. I would anticipate that they may try to appease both sides of the aisle, stating that inflation pressures are coming down, yet that does not diminish entirely the concern for further rate hikes. So, a little bit of both. Yet, should they sound slightly more hawkish, we may see the greenback gaining. And despite two Fed speakers after Fed Chair Powell, I think that Fed Chair Powell's speech will most likely and probably will be the highlight of the day. In terms of the UK CPI rates coming in today, higher than expected. So we're going to be moving on to the cable in just a minute. So those are interesting, and we're going to be looking at the price action together. And as a reminder, higher CPI means that there is persisting inflation pressures in the UK economy. Hence, we may see the cause for further rate hikes being made. Now, we also have the Bank of England's interest rate decision tomorrow. So I'm just going to leave that up until we move into the cable. So we have resistance 2. Keep in mind that it's moving in an upwards fashion in terms of technicals. Yet the narrowing and the failing to break above R1, with the RSI indicator moving towards 50, may indicate a shift from a bullish market sentiment to a bearish market sentiment. So personally, I think that today Fed Chair Powell will sound predominantly more hawkish during his testimony before Congress, and it is a biannual testimony. And today's comments will most likely be reiterated in tomorrow's Senate hearing for Fed Chair Powell. So he has the House today, which is predominantly Republican, and then you have the Senate, which is predominantly Democrats. Yet I think the statements will be more or less the same, if not exactly the same. So what I would look out for is during question time. I think that during the question time for the Republicans, we may see some perhaps more interesting, I would say, questions on behalf of the members rather than the Democrats. Yet both sides may try to make their point across. So the Democrats may want the Fed to ease on their inflationary pressure, so lower interest rates, while in order to boost the economy heading into the 2024 presidential election. So the Democrats have a vested interest in improving, at least temporarily, the economy in order to perhaps help the incumbent president's poll numbers, whereas the Republicans may be trying to shift the blame on the Fed and the current government for high inflationary pressures. So the comments will most likely be, in my opinion, neutral in the sense of saying inflation pressures may be coming down, yet rate cuts in a few years' time. So perhaps a few more rate hikes by the end of the year and then remaining on pause, which may provide support for the greenback. So I'd place more emphasis on the questions made by the House and Senate members. So moving on to the cable. So as you can see, let's move on the daily. Continuing its downward trajectory. It's failed to break above 70, yet it's still above 50. So a bullish market sentiment, perhaps, but once again, on the 4 hour chart, it's broken below 50, implying a bearish market sentiment. So at this point, we could go as far as to say that this may be the beginning of a downwards moving trend line. As usual, I prefer using the bodies of the candles rather than the wicks. It's broken below support at S1 that we noted yesterday. So note that it's broken below with the bearish candle at this point in time. So at the 20th, so yesterday at 12, it broke below. Then it came back to test support and resistance, validating resistance again. As you can see, a wick, but the body remained below S1. So S1 now becomes support turned resistance. So this becomes R1. Now, based on today's UK CPI rates, well, core CPI rates coming in higher than expected at 7.1 versus 6.8, if I'm not mistaken. I personally think there's a cause for a 50 basis point hike by the BOE tomorrow. Now, as we've said yesterday, given the fact that Silvina Tinreyo, former MPC member, has now left and has been replaced by Megan Green, who whose comments in public, so on Bloomberg, etc., in my opinion, appear to be hawkish. So we're replacing a dove with a hawk. So that inadvertently also shifts the power balance, despite it being predominantly hawkish. Having an extra member that's willing to be hawkish may make the case for a further 25 basis point hike. So instead of 25, we're going to 50. So personally, I think that the bank will have to, well, most likely hike by 50 basis points tomorrow, based on today's CPI print. And if that is the case, you may see the cable reversing trajectory, breaking above R1, if not breaking R2 as well. And we'll most likely see that together in tomorrow's technical analysis. So once again, S1, prior S2, that becomes S1. S3 becomes S2. .2615. So this is our new support level at S2. And let's find S3. So we're looking for the bodies of the candles around which price action appears to have fluctuated. So to be in equidistant channel, we can see swing low. So why am I placing it here? As I've said, I prefer bodies of candles instead of wicks. So as you can see, it's touching on the wick of the bearish candle. However, the bodies of the bulls, so one candle, another candle, and two more. So it's fluctuating at the bodies at which price action has moved. So once it broke above, it moved higher. Broke low, moved lower, came back, failed to break, broke, and after it broke, it moved higher, came back to test S3, validating S3 once again before moving higher. So this for me is a valid S3. So we have S3 at 1.248 2480. And let's just note that down. So once again, before moving on, we're anticipating a 50 basis point hike by the bank. Why? Higher CPI print, inflationary pressures persisting, and the UK CPI is approximately at 10% as of now. Hence, very high inflationary pressures in the UK, and they're still persisting. So personally, I think that the bank will hike by 50 basis points and may hike again by 50. So personally, I think 250 basis point hikes followed by 25 basis point hike before remaining on hold until perhaps maybe February 2024, March 2024, and then cutting. Or the earliest cut, I think, would be in December. Prior to that, I do not think that may be feasible, as it appears that the inflation pressures are still persisting. Now, dollar yen. As you can see, despite breaking below our upwards moving trend line, It corrected in the mid-range of the Bollinger Bands yesterday, moving higher to test resistance once again at 142.1. So on the daily, bearish movement. Now, this could be in regards to the BOJ's minutes that were released during today's Asian session. In those minutes, it hinted and stated that the bank will be maintaining their ultra-loose monetary policy, hence may not switch to hiking interest rates. So probably remaining on hold, which is why it has allowed the dollar to gain against the Japanese yen. As you can see, above 50, the RSI moving towards 70, implying a bearish market sentiment. So we're going to be keeping R1, R2, R3, and S1, S2, S3. And why? Well, it appears that it is still moving in an upward trajectory. It has failed to break above R1 for us to switch resistance to support. Hasn't gone below S1. Now, we could have even brought S1 right about here. Precisely, as you can see, the bodies of the candles. So swing high. Validated once again. Now, based on this, you could bring it lower. However, I'd like to keep current S1 levels to allow price action to move between the Bollinger Bands. So it does move to the lower band of the Bollinger Bands. It would have broken below S1 here had it been placed. Whereas now we were allowing the price action to have some movement. So it breaks above R1, which is currently actually moving to test at this point in time. As you can see on the 30-minute chart, 15-minute chart, on the 5-minute chart, it's moving to test R1 once again. However, it does fail to break above R1, then we've allowed some space for the price action to move in a sideways fashion between S1 and R1. If it breaks above R1, potential target for the bulls being the $143.85 mark, whereas breaking below S1 at 140.75, and let's just place it in for our own convenience. So S1 140.75. Now, what was interesting in the minutes was the fact that they said, well, a member said that if the outlook for other economies wasn't as bad, they may have considered hiking interest rates. But this is one member's opinion. However, we are seeing a gradual shift in the opinions of the BOJ's members. So, in my own opinion, that does indicate in the long run, so in the grander picture of things, that the bank will be shifting away from an ultra loose monetary policy as soon as inflationary pressures and recession worries are diminished in the global economy. So, as long as those fears persist, we may see the bank remaining with its ultra loose monetary policy, whereas once things calm down, we may see that shift occurring. However, it is most likely to be gradual, nothing too imminent or surprising, which is why the dollar has gained against the yen. So let's place R2, 143.85, and then R3, 145.70. So just fix this up real quick. R3, 145.70. Personally, it's broken below our upwards moving trend line, yet we could form another upwards moving trend line from here. Yet I prefer the previous one. Why? This for me provides more of a validation. It's broken below the upwards moving trend line. It's testing R1. If it fails to break above R1, then I would hold a bearish outlook for the pair, with the next potential target for the bears being S1 at 140.75. Whereas for bullish outlook, it would need to break above R1 and move towards R2. RSI appears to be stagnating between the 50 and 70 level, implying a bullish market sentiment, yet may be waning, and it could come back down to 50. Okay. On gold, as you can see, our support at S1 at 1,935 is validated over and over again, once, twice, thrice, and another time. As you can see, it's been validated on numerous occasions as S1 at 1,935, yet it's broken below the RSI reading of 50, implying a bearish market sentiment. Once again, switching. Therefore, I would maintain a outlook for gold. Now, the grander scheme of things, this could be a downwards moving trend line. This could also be another downwards moving trend line, yet major price action here. Had this been more gradual? Perhaps yes. Personally, we may see a small market correction to the mid-range of the Bollinger Bands, which is near R1 but not touching R1, and then moving lower. So for a bearish outlook, it needs to break below S1 and move towards S2 at 1,910. For a bullish outlook, breaking above R1 at 1,955 and moving towards R2 at 1,980. Yet we have a downwards moving trend line being formed since the 2nd of June. Hence, we're maintaining a bearish outlook for gold. On the daily, it's moving lower, so maybe slight more correction in an upwards fashion before moving lower. The weekly, moving in a downward trajectory. So we're maintaining a bearish outlook for the gold, for the precious metal. Let's have a look at the Dow Jones 30. If you remember, this was placed last week, if I'm not mistaken, validating. It's failed to break above, moved lower, broke above resistance, failed to move higher, broke below, acting as resistance once again. Yet, this would be my new S1. Once again, I'm looking for the bodies of the candles, which there was price action before. You can see fluctuate around. It could be here, or we could place S2 at around this level. Personally, I'd bring it around here. Seeing major price action revolving around this point. Broke above and moved higher recently. So our 2 is at 33,620. $33,960 for S1. R1, R2, R3 remain the same. S3 at 33,190. S&P 500 remains the same. You can see it's acted as resistance after turning support here. Broke below, now resistance, validating it once again. We're keeping S1, we're keeping all our support and resistance levels the same. Now, if the greenback weakens, then we may see the S&P 500 and the Dow Jones moving higher, in addition to the NASDAQ 100. NASDAQ 100 is interesting following Intel's reports in the past few days. Perhaps some support. We're going to be switching that. But staying on the S&P 500, as you can see, R1, R2, and R3 are remaining as is. S1, S2, S3 remain the same. There's no reason to change. It's broken below resistance and it's acted as support. It's broken below support and acted as resistance, validating our hypothesis. RSI breaking below 50 implies a bearish market sentiment. So on the 4-hour, perhaps a downwards moving trend line. On the 1-hour, If it fails to break above, once again, it's validating. On the daily, moving in a downward fashion. Now the Nasdaq. As you can see, R1 remains the same, broke above, did not move higher, broke below, validated as resistance once again. Yet, at this point in time, we're removing our prior hypothesis of a potential sideways moving channel. I'm going to be bringing S1 higher at 14,940. So this is S1. S2 can be brought higher as well, per peak. 14,650. S3 at 14,255 remains as is. Keeping these levels, just adjusting based on the new price action. Oil broken above R1, so resistance turns support. Let's bring S3 higher, 70.75. We bring R2 higher as well. Then R3. At 75.60. So R1 becomes S1. It appears that the markets may be neglecting the potential impact of China's weakening economy, pushing oil higher. Yet this could be driven by fundamentals and not on a technical basis. So is 67.57. R2 becomes R1. Now, based on the technicals, I would maintain a bullish outlook for oil. Why? It's above 50, bounced off, implying a residual bullish market sentiment. Hence, breaking above R1 and move towards R2, that would validate our bullish outlook. Whereas if it fails to break above R2 or breaks below S1, then I would switch to a bearish outlook. So 73.80, 73.85 needs to be changed. And that is it for today. We're keeping a bullish outlook for the pair. As you can see, it's moving in an upwards fashion while creating an upwards moving trend line. RSI in the mid-range, perhaps some sideways motion before the Fed Chair Powell's speech today. Yet, on a technical basis, maybe moving higher, breaking above R1, next target being R2. Whereas for a bearish outlook, break below S1 and move towards S2. Thank you for watching, and until next time.
Everyone, my name is Emily and welcome to another educational video. The word Goldilocks is a reference to the popular children's story Goldilocks and the Three Bears. The term is used in finance to describe an economy that is just right with steady growth and normal inflation. It is an ideal economy that is not too hot and not too cold. In other words, it is a Goldilocks economy. In this balanced and healthy economic system, there is full employment, economic stability, and steady growth. The economy is not expanding too much to push inflation too high, and not slowing down to enter into recession. A Goldilocks economy is also good for investing and trading. In a growing economy, companies also grow and generate positive earnings, resulting in their shares performing well. Goldilocks economies are temporary in nature because there are boom and bust cycles. While there may be disagreement among economists about what the exact characteristics of a Goldilocks economy are, the basic idea is that there is a balance between growth, employment, and inflation. The ideal conditions for a Goldilocks economy are low unemployment. Unemployment is measured with the unemployment rate, which reflects the number of people willing and able to work but unable to find gainful employment and who have sought work in the past 4 weeks. The Federal Reserve estimates a normal rate to fall between 5% and 6.7%. Another condition for a Goldilocks economy is asset price inflation, which refers to an increase in prices of shares, real estate, derivatives, bonds, and other assets. Low market interest rates and low inflation are also important, as well as a steady gross domestic product. The GDP is the most essential indicator for a Goldilocks economy, as it measures the value of all services and goods produced in a country and reflects the health of an economy. For example, a negative GDP in 2 consecutive quarters indicates a recession. On the other hand, a sharp increase in GDP can push prices too high and result in high inflation. An example of a Goldilocks economy is the US economy of the middle to the late 90s, but also the US economy after the bursting of the dot-com bubble between 2004 and 2005. Thank you so much for joining us today, guys. See you soon. Bye-bye.
Before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're going to be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm gonna introduce myself, a little bit about myself. My name is Cassandra, you can call me Cass. I am an investment analyst for the award-winning research firm at Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I worked in the bank, I worked with the airlines, I was an air hostess, I majored in law and majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken Heishi has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering like, yes, I can see your screen, I can hear you clearly, but today no one's answering. So I don't know if there is something wrong with the chat box. But the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask in the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, So what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys in the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's gonna be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy, that is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. You know how a lot of time price is going in an uptrend, it's going in a constant uptrend or going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EURUSD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Aishi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Aishi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Aishi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Aishi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Aishi and the normal candlesticks is that the Heiken Aishi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Aishi, no matter where the close and start is for the normal candlesticks, with the Heiken Aishi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heiken Aishi and a little bit of understanding. So the Heiken Aishi is the type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heiken Aishi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heiken Aishi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, that can actually have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle, or somewhere in the middle of the last candle. Okay. Okay, so what is the Heiken Aishi formula? Why does the candle start in the middle of the last candle? So the Heiken Aishi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heiken Aishi candlesticks. So the open, which is here, the open of the candlesticks is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks, and you divide that information by 2. Okay, so okay, let's pretend this is the current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why the HA, the Heiken Aishi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you're doing charting. Okay, so the high is the maximum value from the high and the open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heiken Aishi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heiken Aishi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is a difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? For those who are like a little confused, you don't have to worry. Like when we go to TradingView later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Aishi chart? There are a few ways to trade using the Heiken Aishi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Aishi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting, there is bearish rejection, and you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're gonna do is you're gonna see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay. Everyone good for now? Okay, cool. I'm going to show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing, or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Ashi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use a Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, trend, that downtrend may be ending, okay, and it is losing momentum and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlestick display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping, day, or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long-bodied red Heiken Ashi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Ashi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're going to create our strategy. We're going to move on to TradingView to create our strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of $250, $1,000, or $2,000. You get an account. Silver is $1,000 and gold is $2,000. Okay, so what is good about this is that every day we will update these charts. So you can see here, we will update these charts we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP room. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We will show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line. And then you can ask one of us, hey, Desmond, or maybe, hey, Cass, sorry, hey, chief trader, or whoever it is who sees your message, is this a valid trend line? Okay. And then now you can highlight the trend line You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear, okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches, but in this case, this trend line only has 2 touches and therefore it is not a valid trend line. Okay, so you can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX, and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and need help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, or Heiken Aishi for today, the total trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help you trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to TradingView, where I show you guys how we can use the Heiken Aishi. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken Aishi, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken Aishi. So there's different kinds of candles that you can use. This candle is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we've got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken Aishi, so I will show you guys how to use Heiken Aishi. Okay, so click on Heiken Aishi. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joesh. Okay, so let's zoom in because this is really important. The way that you use Heiken Aishi on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things. Okay, always combine it with trend, support and resistance, Fibonacci levels. Please share screen. Thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say let me just go back to your normal. Okay, it will say, go to any particular chart, it will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow. Candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Ashi, okay? For today's topic, we will be looking at the Heiken Ashi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little to see if you guys were following earlier on, I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. This is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify a trend, and you need to identify it on a bigger time frame so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA or the different way of TA is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right? You use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken Aishi has not told you to come up from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use a trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal because of the break of the channel. Number two, Heiken Aishi is confirming that. Okay, let's see what else. Number three, the break of this swing high is further confirming. If price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take note this for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support and resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now, what we're going to do is combine. Okay, we're going to combine. Give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very, very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I'm a bit biased to get in for a sell right now. Okay, we're going to get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's going to be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is, because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi. The day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this sell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together. And then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? There is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm trading. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the candlesticks showing that reversal pattern. Number two, the Fibonacci level. Number three, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, I didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know. But so far, the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support and resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest. I don't think this is a very strong door. I think there's some kind of resistance in this door. But if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area. And then from here, he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784. Okay, because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's nothing to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis, or the charts is showing you, and then you make a decision. So based on all the decisions that I've collected, I am a little biased that the bullish momentum has weakened, and there's a possibility of a short pullback, a very short pullback. Okay, a short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500. Okay, a short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2. Okay, 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay, usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have $100,000 account, I'm risking $500 to make $1,000. Okay, and that's exactly how you would be able to find a trade using the Heiken Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things. Okay, I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heiken Aishi. I'll be using the strategy that I normally use. I do use Heiken Aishi once in a while, okay, but then I usually on a daily basis, I just use the traditional Japanese candlesticks. Okay, look, the traditional Japanese candlesticks is showing bullishness. Okay, but Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye guys. Thanks for joining. Bye.